Excuse me. So there's three causes typically three things that typically lead to a recession. The first is monetary tightening that turns a financial crisis into a credit crunch. The second is when oil prices spike due to geopolitical issues or other issues. And the third is a bust of a speculative asset bubble. And I think it's safe to say that where we are today is we're probably at the end stages of monetary tightening. So that's not the big issue there. Oil prices, even with all the geopolitical issues that we're facing today, are moderately under control and have come down a little bit. And is there a possibility of a speculative asset bubble bursting? Yes, but I think some of the froth has come off several areas in the market and people are addressing them. So I don't think those are the big issues. But today I want to talk about one of the more recent concerns that's come up of stagflation, which I don't think is as big an issue. And then I want to touch on productivity, which is one of the biggest issues we have because productivity is the antidote to inflation, and inflation is one of the biggest concerns on people's minds. And let me just go to the punchline. We believe the market's in good shape. We believe the economy continues to show considerable strength, both in the US and around the world. China had a good number. Europe looks to be bottoming. And so I think inflation's also continuing its downward trend, although we've had a couple months where it reversed itself a little bit. That decline was never going to be straight down. When you go from 9 to 3 in a very short period, to expect to go from 9 to 2 would be just as easy as not realistic. So let's jump right in and say, when stagflation came up again, I was trying to review, all right, what are the characteristics of a stagflation environment? It's really when you have high inflation, not much economic growth, and high employment. And we don't have high inflation right now. We have inflation coming down. We do have relatively low growth, but in the US, it's actually running above trend. China's growth was reported around 5.5%. And I think parts of the rest of the world, Europe is bottoming, but you do see pockets of strength elsewhere. I think what we saw in the reports last week is a mixed bag of numbers, which puts the central bankers in a bit of a tougher spot because we don't have a clear direction on the outcome for inflation. But you had a very good payroll employment. We're at a record level there. The unemployment rate is particularly low, and wage inflation is not pushing up, which takes some of the pressure off from the central bank there. On the other hand, you had some of the more positive numbers in the past of aggregate hours worked coming down, income being flat, PMI reports not looking great, and quit rates coming down are not signs of, they're signs of weakening confidence in the system. And then we had some readings that are also saying that the economy isn't doing as great as everyone thinks to be in a really running hot economy when you had manufacturing and services PMI both coming in a contractionary mode last month. So that's a positive sign that inflation's not really pressing. Unfortunately, inside the ISM numbers, the prices paid index for materials and services was showing it was ticking up again. Not a great sign. So there are a lot of conflicting numbers, and that's part of the challenge that the Fed is facing as they're looking at how to deal with this interest rate environment and where they take rates. And we'll touch on the Fed in a minute. The other problem for the Fed is that they don't really have, as part of their mandate, the need to fight unemployment when we've had 27 weeks in a row of under 4% unemployment. So that's the sign of a pretty healthy economy and not one where you're seeing the kind of characteristics of a high unemployment type of environment. And in a lot of countries around the world, we do have pretty full employment. You just have pockets where youth unemployment is out of whack and other areas where the have and have-nots of countries that we've talked about are really showing the weakness. And when you have that, people leave those countries, migrate to other areas, which is creating some other geopolitical issues. If we were in a stagflation environment, the areas you'd want to invest in based on the past periods would be more defensive names like utilities, staples, and real estate. You would want to move away from IT, consumer communication, industrials and financials. I would just say we don't feel that right now. We're in the opposite camp. We like energy, industrials, materials quite a bit. Those are our biggest areas of overweight. We're in line on tech. We don't think you should be running away from it, but we do think it needs to consolidate a little bit more. But I just think we're in a period now where we're going into an election mode, where the outcome from in the US, the candidates have very different platforms, could give you a different approach. I think you need to be a little more balanced about the risks of where we are. I don't believe the risk is that central banks will be aggressively raising rates from here. I think Chair Powell was pretty clear and gave the market, again, another Fed put when he said last week that he believes that the bar for it's highly unlikely that we'll be raising rates. He said that twice, the unlikely comment. I think that puts the Fed put back in, and why the market rebounded a little bit and why you don't hear as much talk about stagflation. I think the other reason you're not hearing as much talk about stagflation is I think everyone believes that we're in the another phase of a big tech-led productivity boom. We've had 5 big productivity cycles since 1950. The first one lasted about 23 years, from 50 to 73. You saw growth productivity improve about 2.7%. Very strong period then. You then went into about a 20-year period where you had subpar kind of growth at around productivity growth around 1.5%, and then another tech-driven boom from 96 to 05 with the start of the internet, and you saw another big move up in productivity. We then had the digestion from the great financial crisis, where productivity actually declined. And now you're starting to see another phase where productivity is moving up. And I think with the advent of generative AI, the GLP-1 drugs, you're going to start to see another move. But think about if we're in these cycles and these cycles last 10 years or more, we're in the very early stages of what could be something really phenomenal, going to drive the system forward. And I think it's really important because productivity improvements have a lot of benefits, both near-term and long-term. It helps counter the wage increases that we have and need to continue to put through. We've had some big wage increases coming out of the pandemic that we have to digest in the system. By improving your productivity growth rates, you're able to, as a company, offset those wage increases and reduce the wage and inflationary pressures, which then gives the Fed room to cut rates as needed at the appropriate time. Longer term, productivity is one of the drivers for faster GDP and income growth, which allows the system to work much better, allowing corporations to be more profitable and move forward. So this is a key element of really addressing the problems that we have, where we have many problems with not as much money to solve them. And when you have a multitude of problems like we're facing, you need to have the productivity improvements to move forward to deal with that. I think the big issue that's going to drive us forward is research and moving up of the value chain in AI. But I think we're in a battle that's also creating this bifurcated world. And if we are going head to head with China and splitting the world up, that's going to offset the productivity improvements that we get when we're running redundant systems. But it's something that we have to keep in mind, that maybe our view of the risks of the presidential election in the US, what a Trump candidate might mean, what a Biden presidency might mean, or what the bifurcation of the US and China might mean to the global system, I think are really weighing on what's going on. This report just shows you the top research areas that China's focused on in technology reports that they've produced this year, the number of research articles year to date. And it just shows you that we can debate whether the quality of the research is as good or whether the US is better or not. What I would just say is we are facing a formidable army of researchers that are trying to win the battle for tech supremacy, which has economic and military implications as well as geopolitical implications. So something to keep an eye on. But China's all in, we're all in, Europe is all in. It's going to be a battle for how this moves forward. But if we all are doing the work, we're going to succeed in massive breakthroughs that can really lower costs in a lot of areas, and hopefully healthcare being one of the big ones. Another view on productivity is how companies can be more productive. And what Apple did last week, and they announced a buyback, I think that's a typo again. I think it's a $110 billion buyback. What I'm showing you here is the free cash flow from Apple by years. As you can see, how much it's grown from 2010 when they were just launching the iPod and the iPad moving and taking off, and where they've gone in free cash flow. This is on an annual basis. This is why they can do a buyback the size they can. It's also why they can make investments that other companies can't. It's why they can cut a business line like the car business and still be competitive and take that money and move it to other areas, which allows them to be far more productive than other companies can be. And it's not just Apple, it's Alphabet as well. Let me get back here. The Alphabet free cash flow is massive, and look where it's moving to. And a lot of people would argue with where we are with generative AI and where we are with the advances in technology that we're still in the early stages of cloud. And that means the handful of companies that are dominating the cloud space will continue to have big opportunities to increase their free cash flows and continue to make bigger investments in other areas. So, Mark, as we see the world today, these periods of economic disruption, distortion that we're in right now can create big opportunities for returns. I believe Druckenmiller was at the Milken conference this week, and he was saying that generative AI is phenomenal long-term potential with the ability to lose a lot of money in the near term. And I think that's right. I think there'll be pockets of money made and lost, similar to when we saw the start of the internet, where you saw the early winners were not necessarily the long-term winners and vice versa. I think this is also a period where you want to look for the winners that are going to be the less obvious ones. That could be the arms merchants, and whether it's maybe some of the materials companies, the industrial companies that are going to drive the transition that we need to make to deal with these economic disruptions. I think Powell set the bar extremely high last week for a Fed hike. So we now have a Fed put back in, which should give people a little more confidence to be in the markets more aggressively, both private and public. I do think we still are digesting the move to higher interest rates, so that you are seeing some companies finding their natural pricing and valuation levels now, which will allow the mechanism of the economic engine that is the U.S. capital markets, both private and public, to operate more efficiently, and that'll allow the global markets to do it as well. I believe the U.S. remains the best area to invest, although I think there are some very positive signs coming out of Europe, China, and you are seeing companies that are doing exceptionally well. When you look at what Novo Nordisk is doing, for example, where their market cap is bigger than the GDP of their home country, and their size and impact on the nation is outsized in a way that they have to keep things moving, or it could have a big impact negatively on the system as well. We have to look at what's going on in economies and the vulnerabilities that exist. I do think that strong balance sheets and free cash flow are going to be a big differentiator, and that's one of the areas what we want to be much more focused on. I think growth at a reasonable price is the area you want to be, not the high growth companies, unless they can absolutely sustain their growth, because as we're seeing in this environment, more so than any time in my career, I've never seen large cap companies have a slight miss and get hit by 10, 15, and 20% moves in the market in a given day. So I think we're in a very different period, and this is going to require us to think differently about how we're investing today. Mark, we can open it up for discussion and debate.
Sounds good. Thank you, Stephen. Questions, comments? Tim?
Hey, Stephen, I've been wondering about this question for about a month or so. I'm not even quite sure how to ask it. So can you talk a little bit about sort of record government spending and then the low unemployment rate? Now, aren't they, there's got to be some tie between that. If the government is spending money like drunken sailors, or whatever you want to use, the whatever phrase you want to use, and then it sort of artificially depresses the employment rate, or that or lowers the employment rate. But I don't know what the nexus is and the mechanism is, or how you guys think about it, or how I should think about it, or maybe I'm full of beans.
I think you have to, the way I would think about it is maybe in simpler terms, is that we threw $4 trillion into a system, an economy that was doing pretty well. And that was being spent and absorbed into the system, which allowed us to get through some of the economic challenges that we had and allowed us to stay at fuller employment. I think now we're starting to exhaust those monies on the lower end consumer, and the system's being driven a lot by the higher end consumer, US government spending, higher end consumer being the boomers who are retiring now and continuing their spend. I think it's the government who is given companies the incentive to either onshore or reshore businesses. And it's also these big mega cap companies that, as I said, have massive free cash flows that allow them to continue to spend. That's allowed us to be as vibrant a system as we've had and to keep that. So I think the government spending is definitely a driver of why we can be at full employment. And as that slows down, you'll see the employment numbers pick up. But I don't think it's going to be a runaway train that I think the Fed might stick the landing, quite frankly, which is hard to say and believe that they're going to do it. But it looks like they can do it if the wars don't get in the way.
Thank you.
You're welcome.
Wanda?
My question relates to the slide on China that you shown. Can you go back to that slide?
Yeah.
I'd like to better understand what we are looking at. So the number of citations that you were showing, are they total global citations, research articles, or just Chinese? And
It's
what I'm getting
research articles.
Globally, right?
Yep.
And China is, where's China on this model?
This is just the number of research articles on AI produced in China. And it just gives you a sense of the scale that they're kicking out year to date. So this is just as of May 1st, year to date, what they've done. And my point is that we're in a battle. Forget about are we doing more? Are they doing more? We're going up against what's a research army. Austin might know the actual numbers, but I would say it's millions of researchers that we're going up against in a battle for tech supremacy. And we can be dismissive of whether the US is doing better research or more research, or they're just doing a lot of fake research. But I would suggest that the advances they're making, we need to take note. And if we go into a bifurcated system, I think the cost of that is going to be very, very big. And it's not an area that we're focusing on enough.
Fully agree with that. We have colleagues who came from the auto show from Shanghai. All the EVs were on display, and the EVs that were shown in Shanghai are 10 years ahead of development, what we see in Detroit. But going back to your point, so yes, we have an army that we are up against. Do we have a sense of what's our army? What's the US, number of citations? Can we compare that slide to the US in any way?
I don't have it handy right now. I'm actually there's two messages for me. One is that we're in a battle and we have a very formidable opponent. And two is, if everyone is working on this, what the future holds for us in terms of tech advances is it's going to be hard for us to imagine. And I think Austin and the guys in the quantum group at Google are working on stuff 10 years out that I don't think we have any idea what it can bring to us. And that's really what I was trying to bring out here. So
thank you.
You're welcome.
Wanda, I want to ask you a question later about were you at Berkshire Hathaway?
Virtually.
Virtually. Okay. Let's talk. I want to bring that up later. Andy, Go ahead.
Just a quick comment a question, but a quick comment first. A lot of government spending you're seeing tick up now is debt service. It's the proportion that's debt service is increasing almost exponential. So that's a little different than fiscal spending. Anyway, the question, Stephen, was when you go back to looking at stagflation, and how much are you seeing an unevenness of inflation in terms of either sectors or supply chains? When we talk about supply chains, I mean, I'm completely anecdotal. I see stuff all over the map. I see things that are way up. I see things that have gone nowhere, but completely anecdotal. What do you see?
I think the view that we've had rolling recessions is what you're seeing reflective of where the squeezes are on prices and where they're not. I think that we've gotten hit at different sectors at different times, and you see that roll through the system. I think we're in a services problem right now, and you do have pockets in the supply chains for the grid systems and the like that are still jammed up. I think labor is one of the big issues still as well. So I think you're right. I don't think it's consistent across the board, which is actually one of the things that's confounding the central bankers and how they fight the type of inflation that we're seeing.
Wojciech.
Yeah, on the public debt, US is probably over 120% of GDP. Japan is like 260. What's it, if you go back years, probably there would be people saying, you know, the country is bankrupt at these levels, like Japan is currently, and they're somehow surviving. So what is your perception? What is the levels that actually make a country go into trouble, and or maybe that's not that level even?
Well, there are levels, and I would say the way we would look at it at our firm is that it depends on who owns your debt, and it also depends on what your rate of growth is as a country, and your ability to service that debt. The U.S. is a little unique in that as the reserve currency, we're in a different spot than other nations are as the global reserve currency. As tenuous as that may be coming, that puts us in a bit of a unique position. But I would just say that if the growth rates are sufficient on the other side, then it's not a problem. It's when your rate of your debt is debt servicing costs is growing faster than your overall GDP growth rate that you're really skunked. So I think that's part of the challenge. I would say in the US case right now, we have a ways to go, but we have to get our house in order. I think the other issue on the US debt is our entitlements, which really are a bigger issue. But I would point out too, at 5% interest rates, what was missing at zero is all the people living on fixed income, all the people who relied on the income of their bonds are now getting that income, which then translates into revenues for the government as well. And also real money for the savers and real money for insurers and banks that were living off of the spreads. So I do think there's some benefits that go with it that often get missed as well.
Rich Barabee, I didn't mean to remove your hand. Go ahead.
Oh, that's okay. Hey, sorry about that. I'm just in the middle of a few things. Hey, Steve, how are you?
Good, thanks.
Quick question. I want to know, all year, everyone, when I was in Miami and we were here, everyone's talking about the Fed 3-4 rate cuts. And then, of course, now they're saying, everyone's happy that they're not raising rates, et cetera, et cetera. I don't understand why people think they're going to be, I'm not even sure it's going to be 1 to 2 rate cuts this year. I just think that, I understand why the stock market wants it, and that's clear. But when I look at, from my perspective, when I see things, no matter what, look, the chairman is doing a great job. I think he's way smart. He knows what he's doing. But I also think that, you have an election year. And I think the Fed is probably, as much as they don't want to admit it, going to avoid doing anything, right? If he cuts rates, he's helping Biden. If he doesn't if he doesn't raise it, he's helping Trump. Like, I think the political landscape is going to have effect on their ability to raise or lower rates. So I think there's going to be a window of 2 or 3 months where they won't do anything around the election. And, obviously you saw inflation has been stubbornly high. I think one of the reasons why that is because I think a lot of companies right after pandemic raised a lot of the fees, not even prices. We're talking about fees, which I don't think, of course, will go away. UPS has a 50-cent delivery fee to New York City. Like, I think there are a lot of built-in fees which are not going away, which will keep, as companies gotten smarter in ways to raise revenue without actually raising prices. So, do you think there's going to be multiple cuts this year? I don't really see it. I mean, maybe after the election, I think that we'll probably get one. But what's your view?
I think they definitely could stick with what they said they were going to do of 2 to 3 cuts. I think they could still do that. I take a different approach on Powell in this election. I don't think he cares what Trump says or what Biden wants. I think he's just going to do what he wants to do because Trump's already told him if he gets in, he's going to fire him. So he's not really playing to Trump. So he doesn't really care. I actually was going to maybe touch on next week Trump's big push for removing the independence of the Fed and what that might mean.
Shocking.
I think it might be our topic for next week because he's lining up to try and do some stuff there. But I think 1 to 2 cuts is not unreasonable. I think they could get to 3 if they thought that the last couple moves up in inflation are just start to reverse and that they're not going to see it. I don't think it really matters whether it's 2 or 3 or whether they do it this year or next year. I think directionally we have a strong economy that they can take their time to make the changes they need to make unless something blows up around the world that would change the trajectory. But right now we have none of the characteristics that would force them to cut rates are really present.
Right. So I agree. So I think that would actually lessen the amount of, I agree. It doesn't make a difference when they do it. We're just using a calendar year as an arbitrary, measurement. But yeah, I mean, I think the economy can muddle along, however you want to call it, with these interest rates for quite a number of months before there is a need for them to cut.
Yeah, I think his problem is housing, and he can't really do much on the mortgage rates. I think the other thing that he did do with the reducing quantitative tightening by the 35 billion that he reduced the Treasury tightening by, I think doing that, it actually frees up the markets and may help keep rates a little bit lower. There was some concern about the uptake on our issuance, and that would have forced rates higher if we had a squeeze on the market demanding higher rates. So I think I think Powell's done a good job, and I think he will not be concerned about the election in what he wants to make his decisions on for rate cuts. He'll do the right thing.
No, I agree. Okay, thanks.
You're welcome. I think the market just wanted what they wanted, which was multiple expansion.
So Rich, that means that I hope you've already filled out your survey 16, your view on rates.
Yes, it's right after this phone call, my friend.
Yeah. So making a plug here, everybody could talk about what excites, scares, where you're investing geographically, but also inflation and rates, so we can collectively, and we will be presenting that on the 22nd. Andy Fish.
The answer to your question before was on the survey.
Yes.
I would ask people what their time frame is in terms of their investing horizon.
Well, that's sort of a multi-dimensional, context-dependent question, but the importance of duration, I take the point.
Phrase it any way that makes sense.
Okay. But I agree. We've actually had to adjust that on the buy side recently because a lot of stuff that we think has 5 to 10, 15x potential is longer duration. So some people just want that short duration, you know.
I've seen it shorten dramatically in the last couple of years. Yes.
Yeah. I mean, one of our, you know, I won't name a name, but one that's more liquid. Well, actually, the most liquid is Stephen Burke. Right, Stephen?
Every day.
Every single day. You can pull
I
out.
spent 2 hours on the phone last week with someone who runs a pension fund. It's not just family offices.
Yeah, no, there's some pension funds that are, some privates are losing money and they have to recalibrate. And yeah, so this, which takes us to the secondary markets, which takes us to what we're going to talk. We have a whole panel on that in Palo Alto. I think the secondary markets is a really interesting arbiter. Duncan Riefler, was great to see you with Vero. Thank you for inviting us to your beautiful place and putting on the VR helmet. How are you doing? You're on mute.
I am good. I really enjoyed putting on the VR helmet. That was a highlight of my week.
That was good. We used to do our Florida events. We used to start in Vero. It was good to be back there. Maybe we go Vero and then cut over to Naples next time and end up in Miami. Any questions for Stephen?
I was just going to give my little 2 cents on the Fed, and I'm more saying, I mean, I don't think these Fed governors, given the amount of data out there, are any better than any of us are. So in terms of predicting what they'll think in 2 weeks or excuse me, particularly, a few months out. And so we've sort of tracked it. I think they were dying. This is not a derogatory term, but it's a Fed that is more concerned about employment than previous Feds have been. And I think they were dying to buy some insurance in front of the election. And I think they were disappointed when the numbers didn't give them that chance. And, maybe it comes back. So I think the timing is a little bit more important than people think. I mean, I think they need to get something going here, because for the same reasons that some people have been saying on the phone, not doing anything and then having to wait, 4 months or 5 months when, there's actually a lot of data in the employment information that's telling you things are sort of weakening a bit. So I don't know. I think if they get an excuse, they're just looking for an excuse to do something. I'm not sure what the magnitude is. But I'm just curious if you could comment on that, Stephen.
I think they've been very consistent with the dot plots. I don't think they've moved much at all. So I think they've seen what they've seen in the economy and knew that the last, from 3 to 2 is going to be tough. So I think I don't think anyone, I think you're right on one thing, Duncan. I don't think anyone knows what the neutral rate is in this environment that we're in today. I don't think any central bank around the world does. They all have their hopes, but I don't think they know what it is. I think they've said what they're going to do, and they've been pretty close to doing it on a pretty consistent basis. I don't think Powell cares at all right now about the election. I think he cares more about just navigating through the problems that he's got. And I don't think the election's one of them. I think he just wants to leave with the place on a good trajectory if he's going to leave. So I don't know. I don't think they've been off course, or I think what threw off the inflation thing was adding $4 trillion at the 10 years into an economic expansion might have been a little much for the system to handle. And that's why it's as strong as it is, and why people are surprised that we continue to have as good an economy as we have. So I think we're going to be in the mode where they'll lower rates at the appropriate time. And if they get behind, they can do a 50 basis point cut instead of a 25. So does it really matter? Are they going to be that far behind? I don't see it.
Mm-hmm.
For me, this economy is stronger than people are giving it credit for, mainly because so many people are getting impacted negatively by it. on the lower end. I think the other element that we talk about, but we underweight, is the impact of government spending, and then what the companies are doing to match it, whether it's with the foreign direct investment or just their increased capex. What's going on in the U.S. is still really pretty spectacular, and you're seeing that in Mexico and other countries around the world, Southeast Asia, and other places. The realignment of supply chains is actually creating a lot of economic activity.
Which happens to be our theme for Thursday's lunch. Supply chain challenges and opportunities, which will be hybrid. So if you want to join, all you need to do is RSVP here. Click on the May 9th lunch. Any other comments or questions?
I had a quick question that may not have a quick answer. There's a lot of talk in this forum and in the papers about concern with China getting more advanced. I guess the bottom line for me is why? Why be concerned?
Well, it's ironic you're asking that question.
Well, not really. You've got to understand, I grew up in Australia. Australia does not lead the world really in anything, right? Life goes on. Other nations advance in different ways, build big things, have breakthroughs in science. So what? Life goes on.
But the Australians are, that's not, if the Australians I'm talking to, they have heightened concern. I'm curious what you think the zeitgeist is of Australia too on that regard.
Sure. But
well, here
my
come the
point
hands.
being-
Maybe I'll let
Yeah.
Andy and Michael answer your question, not me.
Sure. Fundamentally, why so much fear?
Yeah, I think if it was 10 years ago when everything was copacetic in Hong Kong and the Chinese weren't being quite so aggressive militarily nor economically around the world, I think there'd be a whole lot less concern. People would expect them technologically to, quote unquote, catch up as they were doing it, and it would be more benign. I think people are concerned about them using it globally in an aggressive way, as they have in their own economy. They literally track every human being with artificial intelligence. So I think that's the answer. I'll let anybody else chime.
Maybe Michael Hammer.
Sure. Austin, ask a Uyghur what they think of the Chinese government and how they treat people. Basically, you have a conflict in worldviews and perspectives. If you like an authoritarian state, then China advancing ahead of the US and the West makes no difference. On the other hand, if you are concerned about authoritarian government, it's a problem.
I guess I'm more concerned about governments locally here, frankly. The way the political landscape is shaping up in the US concerns me a great deal more.
Different problem space.
Well, we can be concerned about both. Stephen?
Or it's the same problem. It's a problem with not the populations that people are concerned about, but the leaders. And that there's a lack of trust in the leadership of all the countries, or many of the countries. That is where the fear comes in of a bifurcated world.
Alan?
Yeah, it's interesting coming from Australia because the Chinese have, it's been discovered that they've infiltrated the government in Australia, and I believe your legislature. And so you can see also within Australia, around Australia, the Chinese influence on many of the archipelagos and the islands for the shipping lanes that are going in and out of Australia. and that they're trying to definitely get much more aggressive there. I think the other question you have to ask yourself is, what if China were to get Taiwan and semiconductors? You look at a lot of the things that you purchase, and China has really made it be known that they are operating on a bifurcated economy, a two-tier economy, China and the rest of the world. And with that access to not only semiconductors, rare earth minerals, and items, it really will change the game and change the economy, and that influence, more importantly, upon what they hold into the legislatures and the economies is where that real power will be. I just want to correct, there was the lady early on had mentioned that the person visited Shanghai and saw the EVs and they were 7 years ahead, and that's not true. What China has done is, I visited Shanghai and I saw the EVs. What they've done better with BYD and other companies is really, integrated the whole EV supply chain into one, be it the batteries, such as BYD has really done that better than anybody else. Tesla is right there. But China can do it cheaper because they have cheaper access to labor, and that's their biggest benefit right now. But anyway, we'd love to hear people's comments. Thank you.
Fair enough. Other comments on that or other questions?
Fundamentally, I'd really like to see more drive to cooperate and work together. There's such a drive to compete and be distrustful. And that itself can be very dangerous. If we don't build bridges, if we don't work out how people work, we don't find ways to work together and make that the focus. If the focus is compete, that can be very bad.
There was a general that was making a similar argument. He was definitely saying, I think we need more diplomats in the fore.
Yeah.
So you need both. Sorry, Stephen.
But isn't the strategy, that cooperation, not compete, that was something that
This is
the
Roger
US
Arjun speaking. He's iPad. Go ahead.
Oh,
Roger.
sorry. The US did that back with détente with China back in the 70s. And the ideology at the time was with a communist regime to cooperate, not compete. And then eventually with the thesis that private market capitalism will eventually triumph and lead towards liberal democracy. Obama tried it as well until Trump put a stop to it. Obama tried that with Iran. Again, the thesis being that capital markets don't compete with them, have them introduce them to capitalism, free markets, better standard of living, and then that will eventually lead to a better government. It didn't work in China. Obama tried it in Iran. Trump reversed it. But the thesis there, of course, is, again, don't compete with them or challenge them in a confrontational way, but let capitalism or free markets eventually rule the day. I think that thesis is, or at least as of now, hasn't been proven to be true with China, and may not have worked with Iran if it had continued. Just a thought.
Didn't we try that with Russia? Didn't we try that with Russia as well?
I was going to mention that.
But
I would argue that things changed with Xi. His view was very different than the previous Chinese leaders, and Trump's view as president was very different than the previous US leaders about how we operate in the world. And I think those two events probably drove as much of the discussion you were asking, Austin, as anything. And I think, Roger, you're right. I think it was the leaders that changed that dynamic, not the countries.
Fair. And the point with Trump was the difference with the US and China is that Xi will probably be in there for a while. So you have a leader, same with Putin, that will determine bad outcomes for 2 generations. Whereas Trump, even if Trump were to win, he'll have 4 more years, and I assume that's it. America will resort back to hopefully a stable, rational democracy. The same can be said with Iran, Russia, or China. given their political structures.
But my question
Don't
is,
forget,
when we look at China today, is it about communism versus capitalism, or is it about Xi and his nationalist agenda for China? I don't think communism is the big issue these days.
Andy, do you want to say something? I just muted you because you have an echo. Andy?
don't forget, it's very recent. We're worried about Xi in a long time, and forget Trump. It's very recent that the world has suddenly realized that the U.S. political system isn't stable. And it used to be that 4 years came and went, but the U.S. system was the U.S. system. I don't think most of the world looks at it that way anymore.
Alan?
I would just say it's definitely not communism in the sense of look how we're partnering with Vietnam, a communist country. And they're now one of our best, brightest trade partners in Southeast Asia.
If I can maybe focus where I'm coming from, just think about the following question, which I don't expect you to have an answer to. Under what circumstances would America accept not being the leading country? There are many countries in the world, they accept they're not the leading country. They just get on with life and focus on their own business. Under what circumstances would America say, it's fine. America can go and do their own, China can do their own thing. They can blast ahead. They do whatever they want. We'll just focus on our own life.
I guess if there was a world order that was congruent with our values, is there going to be a world order with those values protected? Does Europe step up, which was sort of starting to see?
Just question whether the only way for America to have everything it wants, its own values, its own political system, is for it to be number one. Is that really necessary?
Well, we can't be number one forever. So it's a question of how does the world order shift, or we lose its protection?
Actually, it's an interesting point, Mark, you're making is, are we really, there's a push to change what has been the post-World War II order. And that's really been driven by Russia, China, Iran, and North Korea. So that's what's going on, Austin. I don't think it's the U.S. wanting to cling to being number one. It's the world order post-World War II is going under change, and that's what people are trying to deal with.
I mean, you say that Trump is very much America curious. First, make America great again. It's going to be hard to convince me that politician that doesn't want America to be number one at all costs.
Yeah, but I think that's not a reflection of, that's only a reflection of part of the population here, I think, is the issue. So I think when you think about it gets back to the leaders and who we decide to put in. In China's case, they didn't have much of a vote, but in the US we do.
And it depends on how you define number one, because China will eventually overtake the US in terms of largest economy. That's just because of the numbers. I think probably from the US's perspective is their strategic influence. And they can lead from behind. Look at Qatar. Qatar is one of the smallest countries in the world, yet they're trying to be a really big and influential international player, but they're tiny. So you can still lead from behind strategically, diplomatically, morally, or other, not necessarily being the largest economy, which US will be number two in X years. I mean, you could look at I don't forgot the numbers when China will overtake the US.
Mark White, did you want to say something? You came on.
Roger,
yeah, I actually do. Thanks, Mark, for noticing that. But I spent quite a number of years in China, about 20% of my time between 1988 and 2012, with a diminishing amount of time thereafter until I stopped going in about 2016. And a lot of that's because of Xi's policies and what it changed there. And I divested most of my interest there. What I would say is that, the question came up about should we cooperate and should we have a more diplomatic solution to this competition that's going on? What I would say, that was the neoliberal project that went on for 20 plus year, 30 years. And we ignored, and the US turned their cheek and ignored a lot of transgressions of international law, of WTO, of intellectual property rights, and allowed China to become the factory of the world. Which, in retrospect, we're reevaluating that now, and I think we've reevaluated. We've turned from that position. That enabled China to get very rich, and Europe did the same thing. It allowed China to get much richer. I said very rich on a per capita basis, but it dramatically improved their standard of living. And I think that was a good project with good results. But I think that with Xi in power, I think he leaves not a lot of room for that level of cooperation. So that's my perspective, having spent close to 30 years and quite a lot of time in China.
The last three briefings, we start with the subject and it ends with China.
Wonder why.
Yeah. Michael and Stephen? Or maybe, Michael, do you mind if I let Stephen, because Stephen hasn't spoken yet?
Oh, please, go ahead.
Go ahead, Stephen.
I was going to say, when it comes to the US, I'm Canadian, by the way, so I'm looking at the US from the outside.
We couldn't tell that,
And-
Stephen.
What's that?
We couldn't tell that.
Really? Okay. Well, I'm not wearing a flag, so you never know. And one thing that strikes me when it comes to US policy on a global stage is you cannot dissociate the US policy from the military-industrial complex. At least that's the appearance that I see. There's so much money that flows into the military complex in the US. Diplomacy is supported by military action or military presence wherever the US goes, just about everywhere. And with the threat of military action if things don't go its way. And I think to address to the question of when would the US be willing to be number two, which I think is a great aspiration. I mean, to always be number one is a very difficult chase. To be number two, you'd have to let go of that military reflex. And I'm not sure that the US, when I say the US as a political system, as you said, Mark, there's a difference between the population and the politicians. But the political class on both sides of that aisle are completely supporting the militaristic reflex of the US government. So I don't know how they would find a way to pull back from this focus. That was it.
Yep. Thanks, Stephen. Mike Daly.
Yeah, thanks, Stephen. You brought up some good points, and it's always great to get an outsider view onto the U.S. stage. I was just contemplating this morning, if elected into a national office in the U.S., I would push for a 20% reduction in that military spending. I just cannot fathom how we justify our defense. Defense requires this absurd consumption in armaments and the like, personnel to support it. It just, our ability to put our imprint, our nose, our influence in other places in the world while we neglect the children, the elderly, and the corrupt healthcare system in the United States. It's just it's mind-boggling, and that ends my political rant. Thank you.
So, Michael, just your turn again. Michael Hammer.
Okay, thank you. So I'm actually going to respond to Mike. And what we see is a world that is rearming. And I was just having a discussion yesterday, switching focus from China to Russia and Ukraine. Look at what Macron said about sending in French troops if the Ukrainian lines are breached. this is almost a situation like the run up to World War One, where you have these various things happening, not fast. It's almost like a slow motion train wreck. And so what you could actually see is an alignment of Western Europe, the US, versus Russia, China, Iran, North Korea. I'm not sure who else to throw into that lineup. And I'm not trying to say it in a judgmental way. I'm just observing what do we see happening on the ground. And it's very difficult. It's simplistic to say, oh, if you only do this one thing, bad things won't happen. There's so many moving bits and pieces, and it only takes a miscalculation or a decision by one player to totally change the game that's going on.
Yep. Stephen, you want to bring that?
Yeah, I wanted
Friendly.
to address a quick comment that Stephen had made a few minutes earlier about the difference between China and US. China doesn't elect or doesn't choose its politicians than Americans do. Why is it that in Congress, the rate of incumbency...
No, hold on. I keep going, Stephen.
So why is it that in the US Congress, once elected, people die in office effectively? It's become a geriatric treatment center. I think there's an illusion of choice there because everybody hates politicians and they keep getting reelected. To me, it's an absolute mystery that, Congress has the lowest approval rating of any institution in the US on almost every survey I ever read about. And yet people keep reelecting their own. It's a 95% or 92% reelection rate. This election after election is stunning.
Yeah.
The US Congress today looks like the Soviets under Brezhnev. Remember when they used to stand on the Kremlin with all the generals with their medals? They all looked like they were about to die. That's the US Congress today. And it's a mystery to me why this continues.
Public ignorance.
Andrew Voss.
Just briefly, and I cut out. I had a technical problem, and maybe this was brought up, but there are kind of three glaring areas with respect to China in my mind. Lest we forget the 100-year war that China purportedly is fighting, and there's lots of documentation on this. When it comes to, to Austin's point about challenging and competing with the U.S., well, that's never sat well with me. There's still a lot of question marks about the pandemic that the world just went through, and China's involvement with that, and the human rights violations in China. So, I'm just throwing that out to the group, unless I missed something here.
Well, what I'm also hearing, it's tough for us to we're not angelic. We're not without fault, even down to our Canadian friends pointing that out. We like to criticize ourselves.
Fair
Stephen,
enough, but
anyways,
fair enough.
We hear Canadians, but it's true.
May I add one thing to that, Mark?
Yes, Mark.
The other issue about U.S. primacy in the world. If you look at the overall span of history in the world, I don't know whether you choose the Roman Empire, the Mongolian Empire, Ottoman Empire, or whatever, the British Empire. There's always been some sort of primacy that managed part of the world order, if not dominated the world order. And right now, I think it's no matter how imperfect the U.S. is, I think there is a desire by quite a few Americans that we preserve some degree of that order because I think it's served the world well. Regardless of how you measure it or how you target U.S. involvement in foreign wars, there's been less war. The amount of war up until recently in the world has been steadily declining, the number of deaths due to war. So, I think it's choose who you want to lead the world. I think I think the United States in the past has gone isolationist and has accepted that with not good results for the world order. And so I think it's kind of choose what you wish for and be careful about what you wish for.
Wojciech?
China has been the biggest
You said the China's been the biggest
for
and I lost-
90%
I want to take
of
you off
time of
video.
human history.
Wojciech, can you start again? We lost you.
Okay, sorry.
China has been
Yes. China has been the biggest economy in the world for 90% of the time of human history. And I don't think anybody would say that China dominated the world during this time. So I think that there is something about China that is not like colonists of European colonists of the world and the US that somehow has desire. So I think it's very much different. It doesn't even matter, to me at least, if China becomes the biggest economy and becomes even twice as big as the US. It's still going to be kind of self-centered and very much controlled, inner controlled country. So that they have to find, if it becomes weaker, we have to find other country to rule rather than China. That would be my point.
Well, anything else that's people feel compelling other than filling out survey 16?
Mark, you asked at the beginning, what else, what other topic could we add to these meetings? I would be very interested in a discussion on the central bank digital currencies or the drive behind it. I'm personally completely against it, but there seems to be a lot of support for it as well. So it's a subject that I'd be very interested in listening into.
Well, Stephen Burke, if you could go to YouTube, our YouTube channel /361firm, and you go to search the channel. If you were to look up central bank or digital currencies, you'd probably see Stephen Burke every 6 months or so.
We did two, Mark. There was one on back in the early days of crypto where we talked about a 2018 report from the Bank of International Settlements on how they saw crypto and for central banks, and then they did an update one. So, Stephen, if you go to the Bank of International Settlements, they have a good piece on that. And also the New York Fed also has some stuff on central bank digital currencies. And the Bank of International Settlements does a good job of talking about their pros and cons from the early days. And now their more recent one is how they see it at the
right here
at the core. It's like a wholesale retail one.
Yeah. So just to share this, to your point, Stephen, you can take a look. These are all the briefings where we've hit on that subject. Anyone else? I think Andy, you had your hand up one more time.
Yeah, there's one premise that the U.S. builds its military not to use it as a deterrent. Clearly, some presidents have decided to use it. And one thing you can look at is the Korean War started because they didn't think the U.S. would come in. They swept through southern Korea and took the whole thing over. And you could argue that Putin never would have invaded Ukraine if he didn't think he could succeed, if he thought he would have been pushed back. And then what's the impact of Europe essentially demilitarizing and doing what was suggested before, is taking all that money and putting it into nice, good things? And to what extent does that lead us to where we are today?